Well, happy Monday once again, everyone. Bryan Devore, Devore Realty Group, and we have the Monday market moment. Hopefully you did turn back your clocks. We'll be talking about turning back the clocks in just a couple moments, but first let's talk about what's happening in the real estate market. Right now, we have a total of 4,455 homes for sale throughout San Diego County. That's a drop of 61, quite a big drop from last week. Median list price of those homes, $875. Average days on market is 49. Pending sales, 2,043. Also a big drop of 71 from last week. So more homes, bigger drop in the number of pending sales than the number of active listings. Median list price, 785. Average days on market, 31. Months of inventory did drop a little bit. 2.47 months of inventory. That's a drop of 0.07. So 3 months or less is still considered a seller's market. So we are technically still in a seller's market. That chart shows total actives and total pending. So we are seeing the total actives has been dropping steadily over the last few weeks. Number of homes in escrow has also been dropping, kind of following the seasonal trend. Since last week, 636 homes came on the market. That's up 4 from last week. So 4 more homes came on the market last week than the week before, with a median list price of $825. New pendings, 314. That's down 17 from last week. Median list price of those homes, $799. The average days on market for the homes that went pending last week, 27. So the homes that are going into escrow are still selling for in less than a month. New pendings listed within the last week, 19, and new pendings listed within the last 2 weeks, 92. So 6% of homes are selling in a week, and then 29% of homes are selling in 2 weeks or less. Since last week, 340 homes closed escrow. It's a big increase of 36 from last week. That's a positive sign. Median list price, $748,250, and the median sales price, $740. So we did see a median sales price below the median list price for the first time in a couple weeks. Average days the market of the closed sales, 27. That's down 3 days from last week. The least expensive sale was in Chula Vista, $75,000. The most expensive sale was $6.4 million in Carmel Valley. Here's a chart showing new actives, new pendings, and new closed sales. So since we hit the peak of the most homes going on the market about in the middle of last month, we've seen a steadily declining number of homes coming on the market, but then we did see a little bit of an increase this past week. Number of pending sales is continuing to drop. The number of closed sales did go up. Here's the median list price and median sales price. For the first time in quite a long time, the median sales price did dip below $750. So that's we're going to have to watch that and see if that's the continuing trend, if prices are going to continue to ebb, but they have been going down overall slightly over the last few weeks. Okay, this is a chart that shows a $900,000 mortgage. If you had the mortgage back in the beginning of the year at 3.22%, you'd be paying $39.02 a month. But right now with rates at 7.08, it's about $6,036 a month. It's a big increase monthly of $2,134. One of the reasons why demand has gone down because rates are so much higher. So we're going to talk about rates in just a moment with respect to turning the clocks back, and hopefully you did for daylight savings time. Did you know daylight savings time was first implemented in the US with the Standard Time Act of 1918? So it's been around for quite a long time. It was a wartime measure for 7 months during World War I to add more daylight hours to conserve energy resources. So it was not to aid the farmers, as a lot of people think. It's a long time ago, and it was during wartime. Here's what San Diego looked like way back when. Unearthed some of these photos here. Shows some of the landscape of San Diego around that period of time. Looks a little bit different now. But then here's an interesting chart. Interest rates, we talked about, they're about 7.08 right now. In 1918, this chart shows what mortgage rates were. It's about 5.7% in 1918. The orange line shows that, blue line shows bond rates. So interest rates are a little bit higher than they were back then. Historically, interest rates were around 7%. So we're right around where they are historically. They are a little bit higher than they were in 1918. So turning back the clock a little bit, that's this week's Monday Market Moment. Scan that QR code to track your home's value. Visit my website for all kinds of good resources and information. That's it for this week's Monday Market Moment. Look forward to seeing you next week. Have a great day.